Recently, I made a video explaining why I think Uber is a good stock to buy. The bear case for this company was, however, the situation with robotaxis. Autonomous vehicles might take over Uber's market share and lead to its demise. I, however, had a contrary view to this situation, and I'm here to explain why I think robotaxis will never become profitable in the next few decades. Now, don't get me wrong. I think robotaxis are a genius invention and will lead to the future of transportation. But as a stock market investor, I can't help but feel like people are overestimating their capabilities. First, it's important to understand what is the definition of a robotaxi. And I feel like AI summarizes this best. Robotaxis are fully autonomous vehicles that provide on-demand ride-hailing or taxi services without a human driver. Now I get to my point where I strongly believe Uber will never be disrupted by robotaxis. At least not for the next few decades. I also strongly believe that many companies that are already operational with robotaxis will not become profitable for a significant amount of time. And I'm going to explain exactly why I think this is the case. It all comes down to basic math. So if you look at any single robotaxi company, you're going to see that every single one, including some of the biggest companies, are unprofitable. WeRide is a robotaxi company, and what you're going to notice with every single one of these companies, including Waymo, including Zoox, and all the operational robotaxi companies in the world, is that they're all unprofitable. If you look at the free cash flow for all these companies, you're going to notice that they're all in the negative. WeRide is free cash flow negative. Although I don't have specific metrics for Waymo and Zoox, they also lose a significant amount of money. Waymo's operating losses have been reported as 1.23 billion in the last quarter, and they only make 388 million in revenue, so those losses are extremely significant. Although Google is an extremely profitable business and they own Waymo, the Waymo company itself with the robotaxis is significantly unprofitable. And as I mentioned previously, it's the same case with every single robotaxi division of each company. So why is it that every single robotaxi business is losing money? Well, the answer comes down to very simple mathematics. And I'm going to avoid getting into complicated details of different technologies and different types of uses each technology has in the robotaxi. I'm going to focus purely on basic fundamentals and basic profitability metrics to help you understand why these businesses are unprofitable and why I think these businesses will remain unprofitable for the next few decades. So cars have always been liabilities. Once you go buy a car and you drive it off the lot, it decreases in value around 5 to 10%. What this means is when you're a company like Google investing into Waymo vehicles, you're buying a liability. And when you buy a liability and you invest in a liability, you have to earn a return on that capital. Because these Waymo vehicles are going to decrease in value over time. They're going to be used, they're going to have wear and tear, they're going to have repairs, and they're going to have maintenance. And Google also needs to cover the cost of charging these vehicles. So Google is paying over $100,000. Estimates say Google actually pays $100,000 to $200,000 for one Waymo vehicle. I'm going to use the middle estimate and say Google pays $150,000 for one Waymo vehicle. And remember, these vehicles are not cheap. They're equipped with sensors, they're equipped with LiDAR, they have a bunch of different technologies that drive up the cost significantly. This is not a normal vehicle Google is investing in. It's one that is very advanced. It has very advanced technologies. So this is going to cost Google a lot of money. They pay $150,000 estimated just for one Waymo vehicle. So what Google has to do now is they have to actually earn a return on that capital. So Google has to earn above $150,000 in a decent period of time just to become profitable, because this vehicle is not going to last forever. It's going to have wear and tear. So Google has to earn a return on invested capital in a relatively short amount of time, around 3 to 5 years. And that's not the only cost involved. There's also going to be a bunch of repairs. There's going to be maintenance. There's a bunch of cost involved maintaining an autonomous vehicle. There still needs to be human interaction to charge the vehicle, to repair the vehicle, and to actually clean the vehicle. Because once you have passengers going into an electric vehicle, this vehicle is going to need to be cleaned after most uses. So all these costs combined could add an extra $10,000 to $20,000 per year. Now I'm going to be conservative and say it adds an extra $10,000 per year. So that would bring the total cost of a Waymo vehicle with 1 year use at around $160,000. What this means is Google actually needs to earn a return of $160,000 just to break even on the cost of their vehicle. And remember, these Waymo vehicles last only around 7 to 10 years. So remember, that's 7 to 10 years of use factoring in constant maintenance, that adds up to the cost. And remember, these estimates are already extremely conservative. We're not factoring in any costs for engineers or any development cost or any research and development. So even at $160,000 per vehicle with 1 year of use, it's still an extremely conservative estimate. What these AV companies have to do is they have to earn a return on capital from this huge investment. And the problem right now is these companies just cannot earn that much money on these investments, at least not for the short term. The vehicles cost way too much, and the cost per mile needs to be elevated significantly to just cover the cost of the maintenance and the cost of the vehicle itself. So we're in a dilemma where these companies are not making money and they cannot increase prices to a certain point. So these companies are basically stuck in a loop where they have to lower the cost of their vehicles and they have to increase the time these vehicles are being used. Now remember, almost half of the mileage is actually just picking up the customer itself. So you have the customer here, and you have the Waymo vehicle that has to actually go to the customer, and that's unpaid mileage. So Waymo is not earning any money just going to the customer to pick up the customer. Then Waymo has to drop the customer off, and that earns them capital. However, once the customer is now dropped off, what happens is the Waymo has to go and find a new customer. So the Waymo is already at the location it dropped off the customer, but if a new customer is somewhere else a bit farther, it's going to have to pick up the customer and use mileage. So this becomes a bit of a vicious cycle where almost half the mileage being used in these Waymo vehicles is unpaid mileage. And that significantly reduces the earnings per mile. There's a post online that summarizes this problem perfectly. They estimate that the cost to run a Waymo for 5 years is going to be around $61,000 per year. So if we calculate the cost per mile needed for a Waymo vehicle just to break even over the next 5 years, it would have to be $1.98 per mile. And this is a major problem because Uber's rates are around $1 to $2 per mile. But Waymo, on the other hand, has to generate $1.98 per mile just to remain profitable and break even. That's not even earning any profit. This summarizes the problem with AVs perfectly. The cost of these vehicles is just way too high, the revenue they generate is just not enough, and they need to bring down the cost of everything just to become profitable down the line. And I feel like it'll take a couple of decades just to get to that point of significant profitability. And that's not even taking into consideration the laws, the regulations, and other obstacles that these companies need to go over. We still have companies like Tesla that don't even have fully autonomous vehicles on the road yet. Yet it's trading at 186 PE ratio, which is just ridiculous. Yet there's still people making claims that Tesla is going to destroy Uber and Uber is going to get destroyed by these robotaxi companies, yet none of them are even profitable yet. But the solution to profitability is not as complicated as you may think. All these robotaxi companies have to do is get their cost per mile to under $1. If they're able to generate revenue on rides with their cost per mile of under $1, they would be able to be significantly profitable. The reason I say under $1 specifically is because that would actually undercut Uber's rates. So Uber usually charges a rate of $1 to $2 per ride. If any robotaxi company could undercut their rates and remain profitable, they would take significant market share from Uber and basically make Uber obsolete at that point. And I think this is something that could be achieved over the next few decades. However, I still think we're quite far from these technological advantages. This will mean that LiDAR and the sensors on the vehicles will have to go down in price, the cost per vehicle has to drop significantly, and the cost of AVs all around will have to drop by over double. I feel like down the line, these advancements could be made. However, I still think profitable AV companies are still quite far from profitability. Do you think these companies will become profitable over the next couple of years, or do you think it might take decades? Thank you all for watching.